Welcome to today's episode, where we uncover the fascinating economic story of Canada. A land of vast forests, global cities, and resource wealth, Canada is often admired for its quality of life and social model. But beneath the calm surface lies a complex economic engine facing growing pressure. Let's take a deeper look. Canada is the 9th largest economy in the world by nominal GDP and one of the most resource-rich nations on Earth. With just under 40 million people, it punches far above its weight globally thanks to its abundant natural resources, strong banking sector, and proximity to the United States, its largest trading partner. Its economy is driven by services, accounting for about 70% of GDP, but also heavily influenced by commodities like oil, natural gas, lumber, and precious metals. Canada is one of the world's top exporters of energy and agricultural products. Canada has weathered many global storms, from the 2008 financial crisis to the COVID-19 pandemic, thanks in part to prudent fiscal policy and a highly regulated banking system. In the decade before the pandemic, Canada's GDP grew at an average annual rate of 1.8% to 2%. Post-COVID, the recovery has been uneven, but still stronger than many peers. Unemployment dropped to 5.8% in early 2024, but inflation remains sticky, driven by housing costs, wage growth, and commodity volatility. Perhaps the most pressing issue for Canadian households? Housing? Home prices in cities like Vancouver and Toronto have skyrocketed over the past 15 years. In 2024, the average home in Toronto costs over 1.1 million Canadian dollars. That's more than 10 times the median household income. Mortgage debt in Canada is among the highest in the OECD. Many young families are struggling to enter the housing market, while rising interest rates are squeezing existing homeowners. This affordability crisis is not just a social issue, it's a major economic risk. Canada's federal debt has risen substantially, reaching over 1.3 trillion CAD, or around 47% of GDP in 2025. While manageable for now, higher interest rates are making debt servicing more expensive. Provincial governments, especially in Ontario and Quebec, also face growing healthcare and pension liabilities as the population ages. And while Canada has maintained its AAA credit rating, analysts warn that without a clear plan for fiscal consolidation, that could be downgraded. Canada thrives on trade. About 75% of exports go to the United States, thanks to the USMCA trade deal. It also maintains strong trade ties with Europe and Asia Pacific. Canada is a global leader in immigration. It accepts around 500,000 new permanent residents per year, helping offset labor shortages and stimulate demand. But this rapid growth also puts pressure on infrastructure, housing, and social systems. Geopolitically, Canada balances between its Western allies and growing concerns over China's influence in global trade. Canada's economic stability rests on several pillars: a transparent and regulated banking system, rich natural resources and energy exports, high levels of education and innovation, universal healthcare and a strong social safety net, an independent central bank with inflation-fighting credibility. The Canadian dollar remains relatively stable, and the country is seen as a safe haven in times of global volatility. But all is not perfect. Productivity growth in Canada has lagged behind other G7 nations. Business investment is sluggish despite low unemployment. The tech sector is growing but lacks the scale of U.S. counterparts. Climate risks, especially wildfires and resource dependency, threaten long-term economic stability. Canada's future depends on navigating a narrow path between growth and sustainability. To succeed, it must improve housing supply and affordability, control public spending without cutting vital services, invest in productivity, innovation, and clean energy, maintain social cohesion in a time of rising inequality. Canada remains one of the most livable countries in the world, but maintaining that title will require bold choices and serious reforms. Because economic resilience doesn't come from what you have, it comes from what you do with it.